All right, welcome back, traders. John Caruso coming to you here for the evening of Thursday, December 22nd. We're going to recap the the March S&P 500 as well as the February gold contract for today. So taking a look here at the S&P 500, clearly it was a risk-off day following a risk-on day that we saw on Wednesday. So that big move higher into the old breakdown zone here at 39.12. We had that dotted line drawn over there. That was a key area. Of course, when we broke that area, it was clearly risk off on the downside. Did get it back up there, retest 39.12. So that's going to be the level. We've got to retake 39.12 with fairly good conviction here going forward for the market to potentially piece together something bigger on the upside. But seeing the risk off today certainly did not surprise me. Yesterday, Wednesday, we did see the VIX laying along 20. Now, the VIX at 20 is almost like trying to hold a ball underwater. You can do it for a period of time, but it's not going to be before long before that pops back above water. And certainly, we did see the VIX actually move north of 24 at one point today from 20 just yesterday. So we saw the big risk off throughout the session. That didn't shock me. We did also have big eyeball discounts, which is a pretty good counter consensus indicator that we use that was suggesting that that Wall Street was essentially getting longer of stocks on the big move higher. They were chasing the market, and precisely we get risk off here today. Big pop in the VIX. At one point, we're actually down as much as 3.2%. We did see a pretty big run up into the close, up. We finished down 1.7, but we did see a 1.5% rally off of the lows. Now, as I have it drawn in here, I actually do believe, and this is coming from a pretty staunch bear right now, I actually do believe that we're in a period that we could bounce. Now, clearly, we had the big run up on the government passing the funding bill. And tomorrow we're going to get PCE index, which of course is the Fed's favorite inflation gauge. So if the PCE index actually comes in cooler than expected, I have no reason to believe that it won't. Of course, we've seen consecutive CPI and PPI readings that have begun to cool. Perhaps the market is going to take that as risk on, and they're gonna try to drive the market higher here. I actually do have it. That's how we actually have it drawn in here. We were oversold at one point down here today. I was getting a reading of about 9 on our oscillator before the bounce. We are no longer oversold here. We're just above 23. So perhaps we get another dive down early tomorrow, down around the low 3,800s. Maybe we reject, hold, bounce again, perhaps on a better than expected PCE index number, and then we can begin to rally. We do think there's probably a lot of tax loss selling going on throughout December, which is one of the reasons for the weakness throughout the month. And then we think we're going to see probably a lot of those repurchases back after the first of the year. But I remain a bear on this market. The fundamentals are pretty awful going forward. And I actually do put a lot of stock into the Piper Sandler HOPE acronym, which of course is the sequence of how the economy slows. HOPE, H starts with housing, O starts with output, P is profits, corporate profits and earnings, and of course, the E is employment. And right now, we think we're somewhere between output and profits. Profits are slowing, we believe. We think that a lot of that is going to start to show up out in Q1, Q2 earnings reports next year. So keeping all that in mind, somewhere between output and profit slowing. And then, of course, the last shoe to drop is going to be employment. So there's still a few shoes left to drop for this economy. But over the very near term, I do think we're in a period where we could probably try to bounce and grind higher, maybe back towards that 4,000 area before we've got a much bigger period of risk coming out in late January and early February. So February, March, and April, we've got that slated as a period of big risk for the market. So we're going to see how it works out throughout January. But I do actually think that we can catch a bid out after the first of the year. So we're going to see how that goes. So that is a look at the March S&P 500. We're going to switch over here. We're going to take a look at the gold contract. Gold's really just in this big range up here. It's still positively configured, still bullish trend. If you're a trader, you've been in here buying these dips, selling on the rips, buying them back on the dip, selling it again, rinse and repeat. We've actually been in there doing that pretty actively. But where we ultimately want to establish a big position in gold is on another retrace back here to the 1740 area, potentially as low as 1700. And we think that that's going to be a place where the market's going to really establish a bottom and really start to have something bigger to say out in 2023. So we're not there yet, though. I actually do think, obviously, the weaker U.S. dollar is assisted in pushing gold prices higher. I actually do think the U.S. dollar is due for a near-term bottom that could take the dollar back to 106, 107 over the near term. So that could be potentially something that presents a period of risk for gold. As you can see, we have it drawn on here, the larger cycle of where we think gold is going. The next 2 to 3% in gold, we think happens back on the downside. So perhaps we do get that retest of this old swing area down here, which comes in 1740 to 1720. We even go as deep as potentially 1690, which would be this retest of the left shoulder. We do think this is a big head and shoulders that is developing in the gold market before perhaps we can have something bigger to say throughout the rest of 2023 and the gold market back on the upside. So those are our immediate term thoughts on the S&P and the February gold contract. Everybody out there who is in the Chicagoland area, stay warm, stay safe out there. I've already done one pass in the driveway with the snowplow. I'll probably be back out there around 9 o'clock tonight. So stay safe, stay warm. We'll catch you back here next time. Good luck.